What up, old Uncle 2? Back with you once again. Welcome back to the Madhouse. So, I've decided to start doing public videos again. We're going to post them here on Twitter. We're going to post them on our company YouTube. Happy to be back. We're going to shoot for weekly market updates to be posted around Sunday, late afternoon, evening sometime to get you prepped for the week ahead. So these aren't longer term looking forward updates, just sort of what to expect in the week ahead, potential things that are interesting if we find anything at all. We have rebranded Transform Trading to WaveLab Academy. Let's go. Welcome it in. We want to sort of hone in on our roots of Elliott Wave, and not just Elliott Wave, honestly, our full tool belt of analysis techniques that we would like to teach. Like Hove and I came up together learning in a special environment of hungry knowledge seekers, and we're really looking to rebuild that. So welcome in. Let's try and do that, boys. All right. Let's dive right into this week's update. We're going to keep it simple. Only a few things of interest for me this week. Well, there's always a lot of things of interest, but we got to keep these videos short, and you know your boy likes to talk. So longer form, probably still for the Discord. Okay, first and foremost, I've been looking for the S&P to sort of have, let's say, a little bit of a larger correction for quite some time, and it just, as it does, it hasn't really fulfilled that. And it's getting now into an area where, hey, maybe we just have to accept that this move that we've gotten is enough, right? Initially, it started around this time in which we did get a three-wave move, right? We'll just lay it out this way. Boom, bop, boom. Let's go yellow. Let's go white. We got a three-wave move, but it wasn't external. It didn't feel like it had enough magnitude. And then from there, it's like, okay, maybe it's going to turn around. And in fact, I believe I posted on Twitter to say as much that, hey, I think that we're going to have, a little bit of an extended downside. And then it got sideways, which typically when that happens, you will sacrifice the typical depth expectation for longer time. Well, it certainly didn't do the depth. It turned around right away. Thought I was wrong, basically the next day opening. However, what we've had off the low can only be characterized as a three-wave move to the top. Well, you just swung it more than three times. Yeah. But overall, you would call that 1, 2, 3, say W, X, Y, right? So three-wave move to the high that was contained within a corrective channel, meaning, actually, was it? It was contained within a corrective channel if we were to use line, but this chart isn't line. So either way, it barely escaped the corrective channel and then swiftly returned and has moved to the downside. However, since then, and then that told me at that time, like, okay, maybe we're going to get this actual correction that I've been expecting. And this is sort of based on context. The original expectation was deeper than this, but based on this sideways context of this would be a flat, this would be a multiple zigzag, and then this should be, we have a couple of options. The first option that you should expect is a impulse here for a wave C of a larger degree flat. However, we'll go ahead and change the degree up here to not mess with you guys. However, instead of that, you could also potentially get a three-wave move to the downside. Zigzag would be certainly fine, a simple zigzag. But what we have here, I would say, is even probably, it's either a simple zigzag or an expanding diagonal. If you really want to get in here and dig it out, I think that you could probably get away with either. But for the case of if the low is in, I'll say it's a multiple zigzag, W, X, Y. I'm sorry, A, B, C, W, X, Y. A, B, C. 1, 2, 3, 4, 5. Is there overlap? Just a bit of overlap on the wicks. I mean, that's why, again, diagonal was in play, but I'm not necessarily going to get in here and worry about that. In fact, if you come down here to line, all those problems go away. It's a bit of a faking the funk, but I mean, it's clearly actionary, reactionary, actionary, right? So this could evolve to be more complex. And in fact, typically you would expect something like that to happen because this is a very strange wave to end on. However, keeping our focus on near-term hard right edge, you can't get this low, this impulsive move off of the low and not take it seriously. This is, you know, whether we put it in line or candle, I mean, it's hard to distinguish either one. This has to be taken serious as an impulsive move off the low. And if it's an impulsive move off the low, what does that mean? It means that there's no contextual reason for this to be anything other than a 1 or an A wave. There's no context for a C, right? A final actionary wave. It's a leading actionary wave. Therefore, we can say that after that, we should look to potentially trade if we're doing inner week, you know, if we're not doing larger term swings over multiple weeks, look to trade 3-wave pullbacks. Now, that 3-wave pullback is going to be key always, right? So we're going to keep track of this in Discord for this week. And this could potentially set us up for the next wave higher, up to those 7,000 plus numbers. It would be a very strange corrective, but this particular market likes to do weird things like that. I mean, come up here and count all this out. It's quite interesting, right? So just very briefly, what we have been expecting, you know, without getting into detail, is something along the lines of this, right? So if we got to 5 there, that's why we were expecting a deeper pullback, something like that maybe, right? But again, when we get the sideways mess, we can give up depth for time. However, even in a sideways, we would still expect this final actionary leg to come down to the low. So we're going to be cautious that this is only an A, right? But as soon as we start breaking out of, you know, downtrend lines and things like that, there's going to be a reason to get excited. Initially here now, as an Elliott wave trader, within my trading degree, I see an impulsive wave that is not, that does not have a good context to be a final actionary leg, but instead a starter actionary leg. So I will personally be interested in trading a corrective move off of the high of this move, of this wave. Personal. Okay, moving on. And then if that does happen, we'll play from there. Maybe we continue higher. Maybe there's more complexity. This is, you know, if it's a big wave 4, tough. Now, Bitcoin, also in a very interesting, let's stay traditional and we'll get to Bitcoin. We'll wrap up on Bitcoin. Another chart of interest for me this week is Meta. We have what appears to be sort of an impulsive move off the high, up to the high. I'm not going to lay a countdown on it here. We have the move, we have a 3-wave move, let's say from the area of the high. This is, you know, we have actually actionary, reactionary, actionary. But, you know, people like to label truncations. What we're focusing in on is that we have this having played out. But again, because this didn't make a new high and we took a 3-wave into it, we'll say that this was the first actionary, right? So either way, it feels like this is a corrective unresolved or an impulse to the downside, right? Because we have one, struggling. All right, you saw what I wanted to do. 1, 2, 3, 4, 5. And there's no actionary completed wave here, right? If we know anything about the theory. So we either have a 1, 2, 1, 2, 3, which is very possible to the downside, which we have taken a strong reaction at the 618 for the potential for a measured move play. And if that were to happen and you were going to go play these targets, you're going to appear to 880 plus 900. However, the other alternatives is this is a W, X, and we're putting in the A of the Y, right? Something like that before you go up. Or it's a more bearish move to the downside. But again, we have this reaction, right? So this would be an impulse, and then you come up here for like a 4, and then you go down. Okay, so even if it is that, what we have here is this reaction and this impulsive wave off the low. So what we're going to look for is even in a wave 4, not that we necessarily want to trade it, but we can look for, because this is such a big part of the major index, that we could look for continued strength. Even, you know, even if it is the most bearish potential expectation, I do see a rally in the area of, you know, anywhere between, well, I guess that's not the right place to draw from the current levels, anywhere between like 4 and 6%, right? Just to get up to this potential way forward. You really wouldn't expect to break into here in the most bearish scenarios. So in the most bearish, you're still 4 or 5%. So that's very interesting to me. And even if you like trading a low time frame on stocks like that, there's interest there. Now, AMD, this one has been one of my favorites all year in the bag. But we are in a very interesting spot. We have what looks to be a potential for 3 waves completed to the upside, right? And then it's coming down. However, we've broken out of this this corrective channel base trend. Typically, when that happens, you'll look to find support when this is tested. So we're going to be very interested to see the interaction. And look, on candles, we've already caught our support, right? So we're going to be very interested to pay attention to how this interacts and how this develops over the week. Maybe we get some sideways drift into it, but we really want to hold this current low, right? In order to expect it to continue to expand to the upside. We take out this current low, to be quite honest with you, we could come back and challenge, all the way back to April pricing. So very interested in that. Bitcoin, the big one, the thing you're here to see. Bitcoin and Litecoin are going to be the cryptos we focus on today. And Bitcoin, this is the CME chart. This has been showing the weakness that was expected at the same time that the S&P weakness was sort of expected, but the S&P is sort of within that weakness is outperformed. Bitcoin, on the other hand, has been pretty weak. Now, you're not seeing a big count here. There's definitely uncertainty at the larger degree. Again, we're focusing on what's happening this week. I think the main thing that I'm focusing on here, and we're going to go over to the Coinbase chart in a second, is that we have a 3-wave move to the high, right? 3-wave move here. So it could be an irregular top that, ends major moves at times, but I'm not there. We don't really have the context for that. And, I'm not really going to get into the details of that because it's pretty much something only I'm looking at these days. So we'll keep that to the educational side of things. But we don't have that context. However, we do have in our back of our mind that is a thing, which most Elliott Wave traders will not. So we are not without concern, but we can anchor still to this being 3 waves that should not be a final actionary wave to end an impulse or some major move to the upside, meaning that it should be a corrective move to the high, meaning that something like A, B, C, W, X, Y, we should be finishing to the low side. From there, we've seen what's playing out to be a very nice looking 3-wave move. On the CME, it's a little different. It looks like it could be a truncated 5th potentially, which I hate going into truncations. But again, with the strong move off the low, you can't ignore these potentials. And then in addition, the Andrews reaction line, you see, you draw the median, action, reaction. See it many times in markets. It's a little higher on the CME. And we also have what is called multi-time frame, multi-pivot divergence between these legs and price, these legs in momentum, and then these legs in momentum, and these legs in price. Multi-pivot, multi-time frame. If I change the time frame of the chart, we're also going to get the divergence if I go up 4 hour or 1 hour, and it'll look a little different. So these are typically topping or bottoming signs. So we like to see that. However, if we come down here to the Coinbase chart, this action reaction line, there's a little bit potential room to the downside. And then if you want to draw this move out, we see, we'll just go down to this line to make it a little more legible. But what we see here is that we have, and again, we're not going to lean too hard into this because we've had quite the reaction, but we've got 3 or 5, 3, and then what appears to be 3 so far. Like, we'd love to see that divergence into this Andrews reaction line to get a big opportunity at the low. But we're not going to, let's say, we're going to look for reasons to not be left at the altar as the week unfolds. But that's really kind of what we want. And then at the same time, if we look at Litecoin, over the year, it's been pretty married to the price of Bitcoin. It's underperformed a lot, but it's kind of performed almost the same. However, we have a divergence in performance here in that maybe it's a leading indicator that the low in Bitcoin is in one way or the other. I'd say it's a very interesting chart for me in that maybe it'll be an outperformer. And this doesn't want to with the two prices on there, but when it does want to retrace, which maybe on that Bitcoin chart is when we go for that final low, when this retraces, oops, maybe we want to look at being in Litecoin as well, for some outperformance relative to Bitcoin. All right, boys, welcome back. This video is way longer than I wanted it to be, so we're not going to do this every week. The target length is whatever Google tells me it's supposed to be, but this is way too long. As you know, I get wordy, but first video back, might as well give it some length. All right, boys, toot out.